What's up, fam? It's J Lobos coming back to you on another episode. And right now, I wanted to go ahead and talk to you guys out there. Obviously, we see what's going on with the market. Interest rates are going up. Obviously, we have high interest rate debts. We have credit card debts. And if right now you're a homeowner, and if you're considering, is it a good idea for me to refinance? Yes or no? Well, guess what? I brought my friend again, Matt Barquette from Real Mortgage Solutions, to answer a few of your questions. So let's go ahead and jump into the video. If you guys out there checking out the channel for the first time, consider liking, subscribing, comment, and share if you find this information to be good. And Matt, again, thank you so much, obviously, for being on the channel.
Thank you for having me.
We have a few questions for you, Matt. Obviously, as you guys know, on previous videos, Matt Barquette obviously works for Real Mortgage Solutions. Him and his team have been able to help thousands of people, and obviously we have him on the channel to answer some of these questions. So one of the questions that we have, is it a good idea to refinance to try to get some of those high interest rate debts paid off right now?
I mean, each situation is case by case, to be honest. When it comes to refinances, there's two different kinds you can do. One's a rate and term, one is a cash out refinance. So specifically the rate and term, kind of just what is exactly what it sounds like. It's just adjusting the rate. So obviously a majority of the country, I think it's like 51%, have interest rates under 4%.
Nice.
So, you know, unless, you know, there's a certain situation where you may have bought at a higher time, you still have a refinance, now you may be able to benefit. You can still take advantage of a rate and term. The other one, which I think you're leaning more towards, is the cash out refinance.
Yeah.
Which obviously is what would help benefit some people. Now, when it comes to cash out, there's a ton of different uses for it. You can pay off debt. So if you are in credit card debt, and I have seen scenarios where people actually are taking a higher interest rate, but they are actually paying less amount monthly, where they're saving $500 to $600 a month, even though that they're getting a new interest rate from the refinance.
Nice.
Or, you know, let's say, you know, you have a ton of equity in your property and you want to add, you know, an addition to it or renovate it, maybe buy a second property or an investment property, you're still able to do that as well. You can take the money out, it goes direct, you can get wired to your account at closing, and you know, you can basically use it for whatever you like.
So in other words, what you're saying is, even though that the rates are going higher and you might have had a smaller rate, financially it could be beneficial, just given the fact if you have a lot of interest rate debt, 26% on credit cards, you might have other accounts as well, it would make financial sense for you to refinance even if the rate is higher. I've actually, as a matter of fact, I was having a conversation too, and to somebody yesterday, and they were telling me that if you make one extra payment more a year, you technically could also go ahead and reduce the amount of years of that mortgage.
Yeah, that's kind of the rule of thumb. I believe it's about 7 years if you make an extra payment towards principal. But yeah, no, definitely.
So one of the, obviously guys out there, because obviously we're talking about refinances, and sometimes it might be a little scary to kind of touch that 3 or 4%. Guys, you got to do the math. You got to do the numbers. Let me ask you a question. How much money could I take out on a refinance?
So when it comes to your primary home, you can take up to 80% of the appraised value. So obviously, if your property's appraised at 400, you can take out 80%. So a loan amount of 320,000.
Nice. Let me ask you another question. Right now, we have, when we're talking about a refinance and a purchase, again, we've talked about first-time home buyers, whatnot. Do I have to bring out, or how much cash do I need to use in order for me to obviously also refinance a property, or do I have to come up without a cash?
Yeah, so there are closing costs involved. It's very similar to when you purchase your property. The one good thing is you can actually roll the closing costs into the loan, so you're not actually coming to the closing with cash, unless you're going over the 80%, which, you know, is very, very rare. The one thing I would always advise when you are refinancing, if you have them, if you don't have them, you can always reach out to your title company. But if you bring your survey and your lender's title policy to the closing, or at least show them to the title company, you're able to get a credit towards that, so it should save some money on closing costs there.
There you go, guys. Last question that I have for you here. How much could somebody possibly, I know we've spoken about the 80% loan to value. What's the highest loan to value? Meaning, and again, too, just to clarify, loan to value meaning the amount of what the purchase of the property is versus the percentage of how much money could I go ahead and take out. How high can I go, or how much money can I take out? Where obviously, I don't know, I've also heard about PMI, or something like that if you go a certain percentage or whatnot?
Yeah, so when you do a refinance, you can only, or cash out refinance, it can only go to 80%. You know, the one thing you can do, which we're able to do, is we can actually do a first and a second, and we can go to 89.99. When you're doing a rate and term, it's different, but obviously you're not taking any money out of the of equity. But for a cash out refinance, the max you can go to is 80%. But like I said, if you wanted to do even more or needed to do more, you can get an extra HELOC for up to 10% basically.
Which is another thing that I want to go ahead and suggest. Obviously, and I know we're talking about purchases, refinances. Would it sometimes make also sense to get a line of credit instead of having to do the refinance?
Yeah, there's definitely reasons to get HELOCs. Obviously, HELOCs now are getting more competitive with the, you know, the interest rates going up. So again, that's something to take a look at. You know, if you have a ton of equity in the property and you have a great interest rate, you know, it might make more sense to just get a line of credit to pay off some credit card debt. But you know, again, it's case by case scenario as to, you know, again, HELOCs, they do have some different guidelines. So there may be a situation where maybe you don't qualify for the HELOC, but the refinance you can.
So guys, this might sound like a lot of jargon. This might sound like it's kind of confusing. This is why I'm going to go ahead and put it in the description below. I'm going to put a link there for you guys. You guys are going to have full access to Matt Barquette and his team to be able to give you a comparable, give you some sort of, you know, evaluation over your situation, possibly sit down, review your financials, review the amount of debt that you have, or possibly like what Matt was saying, you know, you could use some of that money to invest it in something else, have a higher rate of return. You can literally go ahead and pay off certain things that at the end, even though that there might be a change on the mortgage, or again, too, looking at different options, this is why it's important for you guys to literally sit down, evaluate your situation. If you guys have any questions, concerns, fill out the contact form, reach out to us, leave us a comment on the description, and we'll be right with you guys. And thank you so much. Anything else that we have for them for now regarding refis?
No, I think that's about it. Just, you're more than welcome to give me a call if you do have any questions.
Fantastic, guys. Thank you again for the love and support. Until the next time, take care.